Hey there, and welcome to today's daily premium newsletter for May 24th, 2018. So while the market started with somewhat of a drop-off today, it was able to recover and leave us mostly positive. As we mentioned yesterday, we were clearly in oversold territory, and while we still don't believe that a bull run is imminent, bottoms are a process while tops are an event. We've been slowly losing ground since our May 5th high of 470 billion, and today's low of 320 billion can serve as a launch pad, and that would be ideal. That said, we saw a low of 240 billion a little less than 2 months ago, so don't discount the possibility that the market loses volume and total market cap this weekend. In today's news, the biggest story was clearly the announcement that the US Justice Department has opened a criminal probe into whether certain traders are manipulating the price of Bitcoin and other cryptocurrencies. The authorities involved are worried that cryptocurrencies are susceptible to fraud. This is because they're skeptical that all exchanges are actively pursuing market manipulators, and given the lack of regulations like the ones that govern stocks, they allow drastic price swings. Specifically, they're looking for spoofing and wash trading. In spoofing, a trader submits a large order or orders and then cancels them once prices move in their desired direction. Wash trading involves trading with oneself to give a false impression of market demand. This action by the DOJ should be no surprise and is clearly one of the biggest hurdles stopping institutional investors from participating in crypto. With proper regulations in place and the means to enforce them, that is when the market will be ready for a higher form of trading. It should be clear to anyone who trades on a popular platform like Binance that the markets are constantly being manipulated. Such concerns have prompted other countries, such as China, to ban cryptocurrency exchanges and nations like Japan to strictly enforce them. In response, there's been some chatter between cryptocurrency exchanges that they need to band together. They need to tackle this issue and self-regulate, which would be a very positive signal to regulators. Regardless of how this plays out, it's going to be ugly in the short term, as there's a lot that separates the highly regulated traditional markets from the Wild West of cryptocurrencies. But in the coming years, the latter will start to resemble the former more and more. And that's not just hyperbole. The Federal Open Market Committee, or FOMC, the Federal Reserve Committee that oversees the regulatory environment of open markets, is set to meet on May 30th to consider watering down the Volcker Rule, as relaxing it would allow thousands of banks to make high-risk profit-seeking trades with less government oversight. This doesn't mean that banks are going to start trading cryptocurrencies, but it does mean the tide is shifting towards a regulatory environment we had prior to 2008. This comes after the US Congress voted earlier this week to approve easing of the 2010 Dodd-Frank financial law, which sought to prevent another financial crisis. This will encourage banks to grow larger and ultimately encourage more risk-taking behavior that led to the 2008 financial crisis. Most people assume banks make very conservative moves with the money that they entrust to them, but the reality is that they're rewarded for more risk-inherent behavior. Relaxing of the Volcker Rule and Dodd-Frank will see derivatives and more risky assets actively traded and put future financial security of the economy in jeopardy. It's no wonder that many of the retail traders we speak to are moving into cash. Now, we're somewhat skeptical that cryptocurrency in its current form will serve as a bear market hedge or haven if we go through another recession. But it bears mentioning that we've never seen crypto as an asset in a recession. Whatever the case, we're certain that the path forward for cryptocurrency is going to be a tough one, but ultimately worth the struggle as we become more recognized and accepted. So for his thoughts on today's markets, I'll turn it over to Doc. Have a great rest of your day, and we'll talk to you this weekend.
Good evening, Doc here for ReadySetCrypto. Across the board, we're seeing a little bit of green in the crypto space, a little bit of optimism showing up. By chance, is this just an oversold bounce? Let's take a look. Perhaps we have some studies that can give us a little bit of insight in terms of whether we could expect to see some type of short-term bounce here, or whether this is just a little bit of an aberration, maybe just a one-day wonder in the midst of a move to the downside. So across the board, we're just looking at price and volume here. And price is not showing us anything other than this is just a little doji day that just happens to be green for Bitcoin. So let's go across the board here. Let's look at different studies that can help us understand what's going on. Always a good one to put on here is MACDs. So MACDs will help us understand whether or not we have something that is showing some positive divergence. And there's a little bit of that here where we have lower highs and lower lows. Okay, so the lower lows are what I care about, and there's slightly higher lows showing up on the MACD. So a little bit of positive divergence. That is a very small little victory here for that one. Another one might be, let's see, the RSI, the Relative Strength Index. Now, for Relative Strength Index, for a real valid signal, we would want to see something where we have the RSI, say, below 30. And you can see how this has come into play before when it gets down to about 30 or so. This is where people start to pay attention to this, is when it gets below 30, because this is a widely followed study. Not there yet, pretty close. Not there yet, pretty close, but doesn't count. So RSI, we don't really have much of a signal there. The next thing I want to follow here is the stochastic, and the stochastic right now can show us divergences. Unfortunately, it's not. Neither is it showing an upside cross, which is what we would look for. So right now, this is kind of in no man's land, especially looking at Bitcoin at this point. Now, we could go across the board here. We could look at a lot of different studies here. EOS is actually the one that's the strongest today. So we could probably look at something like this, and more than likely we would see a tremendous amount of divergence today on the MACD. And there we go. So we see a lot of positive divergence. So we see lower lows in a price and we see higher lows in the MACD. So that is a Class A divergence showing up on the MACD histogram, which is a good, strong signal. So before I get too excited, though, what we always have to see is descending patterns break to the downside eventually. And so what we would do is, and I have to fix this here, we would have to see the price break above this descending trend line to give it any weight. Otherwise, this is just another lower high setting up along a weekly swing to the downside, which is going to feature lower highs and lower lows on the daily chart. Now, just a quick pitch here. We're actually doing a lot of work on the website this weekend, so keep an eye out for changes for that. I hope that you guys like the changes. It should be easier to find the content that you're looking for. Anytime we change sites, it's always a little bit of a shock. I understand that, but I think that there's a good chance that you guys will quickly adapt to what we're doing, and you'll find it to be a more professional site that you can find your valued content in. So with that, that's the end of today's report. We will be coming back here more than likely Sunday night for the next report. So look for the weekend report. More than likely is going to be Sunday evening. We're going to be taking Monday off because we typically take those 8 days of the year off that the equity markets are off, just because everybody needs some time off from time to time, right? So Monday, there will be no newsletter. Typically, what we also find is that those days that have no institutional volume whatsoever are also fairly slow days in the crypto market to begin with. So again, weekend newsletter will come out on Sunday evening, and there will be no Monday edition being sent. So we'll see you guys the Tuesday after that. Okay? Have yourselves a great Friday. We'll talk to you soon.